What is good, everyone? Today is February 3rd, so our second trading day of February. And I'm going to be going over today's price action. And the one trade that I actually faded, I did not take this, but I know a lot of people that did. It was this 2 minute inversion right here. And I'll just go over the list as to why I didn't take it. So, starting out with the overall bias coming into the day, I was bullish, but I was leaning short term bearish, right? Meaning that I want to see a rebalance down first before we then go higher. So we had an SMT at this high, which normally an SMT will either just get broken through or offer a retrace lower to then go and take that same draw on liquidity. So all I was looking for was something down and then back up. But why wouldn't I take this 2 minute? This is like exactly what I wanted to see, right? It would be, but there is a list of reasons as to why I wouldn't. So starting off with ES, right? ES, we have this same trade. ES looks fantastic right here, but what do we have below? Well, we have an unmitigated 1 hour and 4 hour gap, right? This obvious 1 hour gap on ES where I could go and stand at the back of my room and still see it, right? That gap is going to need to get filled. Because what does the market do? The market either generates liquidity where it accumulates, it seeks liquidity where it will take highs and lows, it rebounds to equilibrium, or we rebalance inefficiencies, meaning unfilled fair value gaps. And that's why the MEC model works so efficiently and how it works. So, driving back down to the 2 minute, we get our inversion, but why is this also not necessarily the best inversion to take? First of all, it is the first inversion after a 200 point dump, meaning you were trying to catch a falling knife, is what a lot of people would call it. If you think about it, right? Somebody standing on a 20-foot ledge drops a knife face down. You put your hands out to try to catch it. Is that a smart idea? Probably not, right? What is the 5 and 15 minute doing? Well, we are displacing down, right? This is displacing candles that are 200 points. It's not just like accumulation down. We are like moving with efficiency towards the downside. Therefore, it's just not very smart to take. We also have low resistance liquidity at our stop loss right here. As you can tell, it's kind of like a trend line and slanted lows, which you just want to try to avoid that. You'd much prefer for it to look similar to this, where we have that wick that hits our key level or sweeps liquidity, right? So as you can see, this is our wick that hits our key level, which is this 4 hour. And we start to, it takes 4 minutes or 5 minutes after that to actually get a reaction off of it. Whereas we would like for it to be almost an instant reaction. That'll just give you much more high probability in your inversions. There's also no stop rate, right? So we're kind of lacking structure here where we don't have a stop rate to then get our actual inversion, which will give me a lot more confidence that we're going to go and take that low resistance liquidity up here. You also don't have an actual manipulation leg, right? This isn't a 1 minute inversion that we're taking the 2 minute inversion. And you can see right here, right, this high that separates our manipulation leg where we want a low to get put in and then a high right here to then form another low and our inversion, right? This high is not actually existing on this 2 minute chart. As you can tell, this wick is higher than this wick, meaning that if a inversion or if a swing high is created based off of a lower low on each side, right, this would not count. Our leg would just look more like this, where we just get a kind of trend down and then an inversion at the bottom. It's not something that we would want to take. We're also not quite in equilibrium yet, which if we're truly in a bullish market structure or bullish market maker model, we will respect those premium gaps sometimes, but for that best manipulation, we would like to see it head towards equilibrium, which we have unfilled gaps down here, especially on ES, right? This is a huge unfilled gap on ES, which was the main part of why I didn't want to take this. Now, does that mean that we can't capitalize off of this? No, right? If this premium gap was going to get respected, then I would just want to wait for the confirmation of it getting respected, meaning, right, we'd come down, trade into that premium gap, get this inversion. No stop rate yet, so I don't really want to take it, but if we make a 5 minute out of that gap, I will then wait for us to trade back into it to get our inversion back to the upside. It's also sort of pattern trading this lower resistance liquidity up here, right? If you think of how a market maker model works, we will start out with our accumulation and then leave this really good draw for much later on. We will displace away, reaccumulate, get our actual reversal down here after sweeping some sort of significant liquidity before then trending back to these highs up here. So there was just way too many reasons for me not to take this than there was for me to take it. Now, criteria wise, right, we have everything we need. We have that 4 hour, which is our high time frame key level. We have our inversion. It's a healthy candle that inversed it. We have an unmitigated gap, and we have low resistance liquidity above, right? It's pretty much all that we need for this. However, we are neglecting all the other context that we have below us, right? If we take this, what do we have at our stop loss? We have open liquidity that the market will then want to seek out, right? Especially considering the time. This was at 9:48, so 9:45 opened, excuse me, 9:45 opened right here. And what did we do at the low? Nothing. We just put in a tiny wick and then started trading higher, right? 9:45 is a high time frame candle. It's a 15-minute candle opening. We would want to see some sort of manipulation, right? Which we have this low resistance here. Who's to say that we don't go and take it just to get our actual inversion? This setup would be much nicer than a just straight up this 15-minute open and then it just placed away, right? If we can align time with price, meaning that that 15-minute went and took that low, giving us manipulation on that 15-minute candle alone, that would give us much more confidence in this setup. So for that reason, I think that this was a very avoidable loss, and that if we got some sort of setup to take shorts out of, I think that that would have been the better option around this area. However, obviously that never happened. But at this point, you're kind of just trading the manipulation leg to then go seek equilibrium and our other inefficiencies. As you can see, we hit this 1 hour down here, which also lines up with NASDAQ's equilibrium. So just try to avoid losses like this that could be avoidable, right? I hope that this benefited somebody at least. If it did, definitely journal today. But yeah, I hope that you guys all enjoyed. I want to thank you all for 100 subs. That's nuts to me. Genuinely means a lot. I love doing this, and I hope that it benefits somebody. I hope that you guys enjoy. If you do, continue to like, comment, sub, all the things. There's a free Discord below. I'll post stuff like this in it. Excuse me. Alpha Futures giveaway still going on. There's 6 spots left, so any account with Alpha that you buy using the code, it will be entered into a giveaway where I'll give away a 50K Zero account. So I'll just Venmo, Cash App, whatever you want, somebody $100. But yeah, other than that, I hope that you all have a great rest of your day. You learn from today, and have a good rest of your trading week. Later.